Hello, everybody. This is Kimchi Crypto. Today, I'm going to introduce Tudor Jones. He mentioned on CNBC interview that it feels like we are in 1999. What does this mean? Let's dive in. Grayscale spot Solana ETF sees $1.4 million inflows on debut as over $500 million exits Bitcoin and Ethereum funds. Exits Bitcoin Ethereum, maybe a little bit of inflows into the Solana ETF. Despite Federal Reserve's first rate cut this year, despite Grayscale Solana ETF was approved, it seems like Solana ETF is not that popular compared to stocks, especially AI narratives. Bitcoin drops, then pops as Trump lowers China tariffs. However, Bitcoin and other non-yielding assets may benefit in the coming months as liquidity returns and investors rotate out of cash-heavy positions into growth and alternative stores of value. It's a prediction, kind of. I agree with this, basically. Despite, however, US-China deal, it looks like crypto market looks somewhat depressed, at least for now. Market stumbles on Fed caution as options expiry looms. In fact, Jay Powell lowered interest rates 25 basis points, but he also mentioned this. December rate cut is not guaranteed. It's, as always, data dependent. We need to check out those data, inflation, job loss, unemployment rate, etc. So market was somewhat disappointed at his message. Consensus plans public debut, taps JP Morgan and Goldman Sachs to lead IPO. The Ethereum developer also backs SharpLink, as you know, DIT corporation with a huge amount of Ethereum, and which this week said it will deploy $200 million into on-chain yield strategies on Linear Consensus Layer 2 network. The move follows a wave of crypto firms including Circle, Gemini, Bullish, going public this year amid improving US regulatory clarity. As you know, MetaMask plans to airdrop its tokens pretty sooner or later. Consensus also plans to IPO, go public, with JP Morgan and Goldman Sachs. What does this mean? Not only them, but OpenSea, Coinbase's Base Layer 2, and Polymarket, those number one in their own sector, they also are planning to issue tokens in the near future. Why? Token issuances and IPO tells us crypto cycle isn't over yet, right? Paul Tudor Jones is the legendary hedge fund manager. It's like an investor of all those investors. He was on the television interview on CNBC and he mentioned, it feels like October 1999. So I checked out the Nasdaq index. Well, he mentioned, we are here. He says, it feels like we're here. Since 1995, Nasdaq index rallied ever since for the 4.5 years. So we are here, which means, the Nasdaq rallied a lot for a long period of time. So we can hear, there's lots of from all around the world, lots of sources that AI bubble, AI stock, we are in the bubble right now. So it's somewhat true, right? The truth is, the February of the in 1995, the Nasdaq index was 756. It rallied and it became 2,900. It almost tripled, more than tripled in October 1999. We are here and we still have a blow of top here. And then maybe 5 months later, on in March 20 in March 20, 2000, The Nasdaq index rallied from 2,900 to 5,132. It almost doubled. We still are missing this type of blow of top in crypto market right now. He also mentioned real interest rate will be almost zero, which means real interest rate equals nominal rate minus inflation rate. So let's say nominal, the Fed fund rate is 3%, inflation 3%, then real rate will be zero, which means it's very good for both crypto and stock market, especially next year. The difference is in 1999, the rate increases, and that was the IT bubble. Right now, we have kind of discussion, dispute, but AI bubble, and we are cutting rates right now. The difference between two periods. And truth to be told, rate cut is a lot more better for stock market, crypto market for sure. And the difference will be the tailwind for crypto and US stocks, AI stocks in 2026. Well, JP Morgan also mentioned today will be, Fed already lowered rates, and this was the fifth time that the Fed cuts rates with the S&P 500 at all-time highs. All prior instances, the S&P 500 was higher a year later with an average return of 20%. The worst one-year return was a 15% gain, which occurred last year. Every time they cut rates at the S&P 500 all-time high, a year later, we had huge gains. Despite one rate cut, despite US-China deal, despite altcoin ETFs are all approved just one by one, immediate market reaction was pretty bad. However, that said, market is very likely to go much higher a year later with 4 out of 4 cases. This is the fifth time. Is this time different? I don't think so, to be honest. It's the odds, but I think that odds is pretty high. Paul Tudor Jones has gold, Bitcoin, crypto, and Nasdaq. Currently, he has all those positions right now because he believes we are still missing a blow of top in everything. That's what he mentioned. With rates going much lower, especially going next year, more DAT companies and ETFs, especially altcoins, and then the basket index ETFs are coming to the market pretty sooner or later. Shutdown will be gone. It will be gone maybe, I don't know, in the early or mid of November. And chartists and macro investors, they are argue that crypto market rally will begin on November 8th. I don't know why. They're telling this like November 8th-ish. We'll see a huge gain. Maybe its rally will begin once again in crypto market as well. And please be reminded that Federal Reserve's new chair will be a Dove King. From June next year. A midterm election takes place on November 4th, which means if you are Trump, are you going to be in a hurry? Are you going to, there's no need to be in a hurry to just push the market and everything. Trump has a lot more time than we think, right? Patience is key here. We need to be ready for the quick last 10-day huge blow of top in the entire 365 days in a year. We need to be ready for that last 10 remaining blow of top days. Please be patient. Thank you for listening.